Hi, this is Kim Watson. Welcome to this week's Big Picture. Okay, so got lots to run through today. In fact, I've got a lovely multicoloured chart for you as well. I don't know if you'll like it or not, but it's got a nice summary chart of where we are with the pairings that are looking at the different features or different aspects that I'm looking at. So, what I'm going to do is just run through those aspects first, and then we'll run through where we are in summarize. So US dollar, we got a 2.5% interest rate at the moment. Originally there was no increase in originally there were increases in 2019, then rates may stay stable for some time was the latest sort of comments we've seen. We've got the dot plot due in June. Now this is where the members plot where they think interest rates will be in several months' time. On a more long range scheme, so it'll be quite interesting to see that. Last one was out in March, so I believe it's due in June. Now I've been looking at this, quite interesting, a bit of a wake up call this morning because I was reading the my Barclays research document that comes through, and that suggested a 0.75 cut this year. Now, I wouldn't disagree with it, but I then sort of looked back at FedWatch, which was originally suggesting one cut, and that is now suggesting two cuts. I dated them round about, my guess here is July for the first cut and October for the second cut. So there may well be some cuts. Now, we've been going from this sort of more dovish tone, whether the markets would be ready for some cuts. Well, it's out there. FedWatch is suggesting it, so it's the bigger traders are aware of it, and it may be the way some things are happening here with the markets and how they're sort of consolidating and that uncertainty. But for sure, it does look like now, Barclays Research was just really, I mean, whether they got it right or wrong, I don't care, but it was interesting seeing that they're saying three cuts. Now, it would make sense with the trade wars that are going on at the moment. It isn't good for any country, I'm afraid, short term. It may well do some damage. We're seeing a slowdown. Everyone's using it as the new it's become the new Brexit. So anything that's looking like it needs a bit of blame, we can blame it on Trump. It's a trumpet. God, I thought of that all on my own. Anyway, seriously, there is certainly some weakness signs out there, but as we often say, I'm not looking at the Chinese yuan here, or I'm not looking at Chinese currencies here. What I am just looking at is the majors. Now, generally when the US catches a bit of a cold, the rest get the flu. We'll see. I think the Euro's got a bad flu already, but we'll come on to that in a minute. But for now, these trade wars are certainly going to be taking their toll. Manufacturing PMI due on the 3rd. We've had that this afternoon, and I should have picked up on that a little while ago where that came in. I think it came in. It certainly came in. I'm just looking very quickly for it at the moment, and it did come in positively. It was a slight down on the pre-estimate at 52.1 versus 53. Prices paid suggests there's a bit of inflation kicking through. We saw this last week with I was looking for other growth factors. There's still some growth numbers coming through there. So to me, it remains sort of the go-to currency really at the moment still. However, we could be in the coming months see some much more dovishness and maybe some cuts. But as I said, the others may be worse. So that's the pound for now. Pound? That's not. That's US dollar. We'll come on to the pound in a minute, but the euro dollar. The euro dollar, okay, interest rate 0, consensus emerging for new long-term loans, etc. Well, we'll see some more about that this month probably. I would suggest so. There needs to be some simulation in the markets. There's plenty of dull data coming through. There's a few odd numbers that are coming through positively, but in the main it's quite dull. Short term, technically, I've put both the the US dollar and index, that is, and the euro US dollar. I mean, they are correlated because the euro is such a high proportion of the dollar index. But I'll show you what I mean by this, but there's slightly lower highs coming in on the dailies here, but overall that could soon switch back quite quickly. But for now, very weakness, lots of weakness for the euro for me. But we'll see a lot more this week, and it could see a slowdown leading into Thursday. Right, finally the pound. I want to talk about the pound. Sitting there with 0.75. No real talk about cuts yet. Nothing to talk about this week really too much on the pound. We've got Trump visiting us at the moment. The Trump meets the Brexit. We've got plenty of new prime ministerial candidates. I think it's thrown my hat in myself. Then I realised you had to be a member of parliament in the first place, so that's blown that. Seems like any fool can. Am I calling myself a fool there? Probably. Okay, anyway, we've had manufacturing PMI came out negative, first time in about 30 odd months, around about 3 years basically for us normals, and so a bit of a negative bit of data coming in. We've got services, which is the more important of the numbers, but still both important, but more important services later on. It is still a reasonable economy overall, although we've had all the excuses around Brexit, but the numbers have been coming in quite well. Technically it's falling though, and it certainly is the weakest on the technicals, which I'll come on to later. Dollar yen remains weak. There's no changes, no interest rate increases going to happen here anytime soon, but it's the go-to safety currency, and it's been benefiting as such with the size of the negative holdings from the asset managers and hedge funds dropping, so it's relatively bullish in that aspect. As inverted US dollar yen, we've seen them really both negative there. I don't know why I've got a question mark around that weekly picture, but the dailies and the weeklies are pretty negative trends at the moment. Okay, Aussie dollar. It's expected to see a change this week in the interest rates. It's forecast there. That will be priced in, but it may still shock those people at the time when it comes out. Still quite negative, and in fact the bigger money is becoming more negative on the holdings there, a bit more negative, slightly less negative from the hedges. They may just be reducing their positions or sizing themselves accordingly. Choppy on the markets, on the currencies there. As I say, we've got data coming out on the 4th and 5th, so GDP on the 5th, more important, we've got the bank statement and speech on the 4th, so retail sales first thing as well, so plenty to go on there. That's Aussie dollar. Canadian dollar, there wasn't the hawkish tone which was expected. I mentioned about it maybe last week, or certainly on the updates. There was no hawkish tone, which was quite a negative factor for the CAD. Oil prices have been dropping, so it's not really helped it either. Asset managers are reducing their short positions to a degree, but the hedge funds are just increasing there. So here we go, swings and roundabouts. Not massive data out this week. Trade balance employment report is a key one, of course, on Friday. Their version of non-farms on Friday coming at the same time. At the moment, we're sort of almost still toying with this bearish Canadian dollar at the moment. Is still pushing in upward trends again. Well, US dollar CAD still pushing upwards, so that all ties up pretty much. New Zealand dollar, it was cut in May. I finally updated this. From the 175 down to the 150. We'll have to wait and see if more cuts are needed there or discussed there. At the moment, asset managers are, in fact, one thing I noticed when I was looking at this is these numbers, the tally of numbers here, starting getting quite high again. We sort of saw this last year and a couple of times when we saw the New Zealand dollar really getting a kick in. We saw these numbers getting negative numbers getting high, and eventually it turned around and we saw quite a nice bounce. We may see it's maybe the beginning of it at the moment. We're seeing both Aussie dollar, New Zealand dollar both tied up pretty much there on the dailies, higher lows coming through. Retail sales out this week and trade balance, so we'll see New Zealand dollar, but they've got some flexibility still to cut things. And I was looking at the Aussie euro, and I really quite negative. I think it's one of the most negative economies in some respects because they've got nowhere to go. You could argue the yen, they haven't with the yen, but they've got more control because it's one country ruling it as opposed to a load of dysfunctional countries trying to run it. Anyway, did I say that out loud? Right, summary of where we sit then. Really should change the background, don't like this pink. But anyway, So strongest currency really remains the US dollar. It's changed. What I've done here is pricing change over 3 months. So I looked at how things have dropped off. So the weakest being cable over the last 3 months, the strongest really being the yen. Economic strength, the US dollar really, numbers still coming out more positive than most. The Eurozone is pretty poor, and they as I said, there's little they can do there. I've actually marked up, well, the UK has still got some reasonable numbers coming through, as has Canada. Yen, well, it's on the balance there. It's always a balance there. It's still got no inflation, so it doesn't really help. More flexibility with New Zealand dollar and New Zealand dollar in the Eurozone for the strength, so they may be able to do something to stimulate even the economies. Sentiment-wise, well, as I said, we get into a bit of an extreme with the New Zealand dollar here, but you can see overall, the strongest US dollar, the weakest New Zealand dollar. The pound's not far behind. Technically, it's the weakest over the last 3 months. Fundamentally, if something was to happen decently, this would switch on a sixpence, if they still make them, or an old sixpence. So could change quite quickly. So that's where we are. Okay, quick technical view. I did one thing I didn't mention when I was looking up here is the S&Ps. They're still seeing money coming out, big money coming out. The S&Ps, no surprise there. Assets are being sold off. Maybe it was the selling may go away. That may have been that we should have remembered that in May, but it's a bit late now. It's June. But anyway, it's still selling off at the moment. Okay, the leveraged money is reducing their negative positions a little bit, but maybe a bit of profit taking, resizing, whatever. But for now, it's still to me a negative S&P from that point of view. So I was just looking at dollar index here, and I'll leave this on and run through the dollar index and why I think this is, well, could take a little tip there. If you whoops, that's bad. If you notice there, it's just literally toying around with the idea of putting a lower high in on this daily basis. So otherwise, really, it's still pretty bullish. And if you take this to a weekly chart, still sort of moving its way slowly up there. Yes, there's some red candles, but it doesn't take much to pitch it positive again. Maybe it's just going to consolidate where it sits around there a lot more, but we'll see. But it's still overall bigger picture there, showing high lows, high highs through. So weekly dollar index up. Euro, of course, is the inversion of that, and it remains downwards. Technically, it isn't as bad as the likes of the pound because it just hasn't sold off over the last few weeks. It's barely moved in real terms. Put some new multi-month lows in, but it's not moved at a massive speed. So weekly still negative. Daily, as I said, with the inverted dollar index there we're pitching just over to try and make a higher low here, which could see a change. We've been looking at this for a long time. In fact, I'm going to just bring this daily chart in here. Been looking at this right into around about where the trend line is at the moment. We'll see if it will push further. It is possible for sure. A lot of these currencies, when they get quite oversold, they get a bit opposite ways. I'm looking to sell this at some point, I may add. So still remain bearish on that, and that comes from the bigger analysis. Pound. Well, the pound, in fact, I should just show you weekly, quite negative. You can see the last few months it's been really I'm on daily here. Let's just change this into weeks. There we go. Last few months coming off there, lower high coming through, looking like it's going to make even lower, running back into last year's lows there from December at the moment towards that area. It's a nice intraday low, often trade short at the moment, but it does have a monthly pivot above there. It's just run into the weekly today, provided me with a nice short this morning, but this may change a little bit as well. And if we see the dollar is just softening a little bit technically, we could see it sort of these currencies pushing up towards the well, they could see the pound moving up back towards its monthly pivot at some stage, or if there's anything, I can't see anything positive coming out of this for a while. So it's really just looking. Yes, we may have some good fundamental data coming out, although as I said, it went into decline on the earlier figures this week in manufacturing. But we'll see what CPI comes. CPI services come out like. Dollar yen. It's almost the grey currency, the dollar yen. In a sense, it's fundamentally it's flawed, but it's remained being flawed for years. weekly point of view, selling off at the moment here from a weekly point, and well, daily it's not really done too much at all today, but again it may soften if we see anything soften here. In fact, this could go the other way, could go with the pound and the euro. If they both rally, this could actually soften as we may get a bit of risk coming out. Sorry, I've got the monthly pivots on the back there. It's sort of just make it a little bit hidden there, but there we are. Anyway, so may pitch up towards that 109.42, but just watch the daily outlook for that. Aussie, just come out to the weeklies here, and downward trend. It's still got some moving averages to run into on the weekly basis there, which may provide some good retracements or selling points. I quite like the daily 50. We'll see if it gets back up to there again here, higher low, so that sort of question mark around about the nearer trend. It's a bit early, but it may pitch up a little bit further, but often we just have these ABC movements and it rolls back. So at the moment it's quite an easy tool with all these. It's just if you want to look at them, and I'll be following them each day anyway, just put trend lines across the lows of these. If it starts breaking out, it's just confirming it's potentially a continuation. Okay, that's the Aussie dollar. Canadian dollar. Canadian dollars struggled, as I said. They didn't bring anything in fundamentally to make it hawkish. Come off a little bit today, and it's probably moved almost. Well, it has just about moved most of what it moved the whole of last week there, and it's been stifled in this tight old range all month. It's pulled out of that. It may just stay within the range. It's pulled back to its weekly and monthly pivots. May get back towards the daily 50 there. Again, if we see the weakening of the US dollar, well, these could all just tip over a little bit and we could see a bit more follow through, but I'm not counting on that too much. Finally, the New Zealand dollar in the pairings of currencies. Little turn there, a couple of hammers sitting in there. It's not overly strong looking for sure, but again it's done at higher low, so in back to the weeklies and monthly pivots. So we'll see how that progresses. Again, I'd be looking towards that daily 50. Now, as I said, the money is getting a little bit extreming. Well, it's not quite extreming, but the negativity is getting a bit strong there, and we could see just maybe a bit more of a push up there at some point. Okay, New Zealand dollar, and finally I was switching across the S&Ps. So S&Ps continue their ride downwards, and they're doing it again today. Just closed a little gap there on the futures here. It's really, well, we've got any rallies coming in. I would be loving to sell into that monthly pivot if it was to come in there. Ironically, I was looking on the short side today and ended up with a long, which did quite nice back to that daily pivot, but it's looking quite negative on the moment. Sorry, I've gone into a 60-minute chart. Behave yourself, Kim. But we could, as I say, could get little rallies on here. What's going to charge that? Really hard to say at the moment, unless something's mentioned in the trade wars. We're quite in a negative scope at the moment, negative background there to these markets. Right, and they still got plenty to go. Okay, we do look at them occasionally and look for bigger corrections, and you can see I've got a 23.6 here. This is from looking at probably a quarterly basis. I was looking at this on we look at all sorts here. We have a good old measure. Yep, looking at the bigger picture, we've barely done anything in this big picture in terms of retrace so far, but may see some more of this coming off if we see some negative numbers coming through. In fact, even if we see the Eurozone getting negative, it doesn't mean to say we're going to see the US equities rally. In fact, it may draw them down even further, just showing the weakness around the world markets. Anyway, before I give you any more cheer, I'm going to be out of here. Remember to check out the daily outlook, and I will speak to you next week. Bye for now.